Okay, welcome back to another episode of Banking Without Borders. So today, Jan and I are talking about stocks and shares ISAs, including the providers we recommend, but also, importantly, the providers we'd avoid. And around 20 million people in this country have an ISA, with a good chunk of them sitting in cash or in something wildly overpriced, which is really what this episode is about. We want to look at the affordable options, the ones with the lowest fees, the widest choice of investments, ultimately the ones that give you the most value. But Jan, before we jump into the comparison, when you look at stocks and shares ISAs, you really see three different products being sold. And I think people are being led into the expensive one without even realizing.
That's right, Johnny. There's a do-it-yourself route where you pick the stocks and ETFs yourself. Fees start at 0%. Some providers literally offer fee-free stocks and shares ISAs in that category. Then there's the managed route where a firm builds and runs the portfolio on your behalf. That's typically 0.5 to 1%. And then there's an advised route where you get access to a human advisor that you can call with questions. They're going to tell you what to invest in. And that's the most expensive route by far. Costs are 1.6 to 2%. And in many cases, there's also a setup fee involved. I think that's quite fascinating if you think about it. 2%, it's such a high fee if you consider that. Yeah, not sure if that's really needed. In my opinion, the do-it-yourself route is probably the most sustainable route for most people.
I do agree with you, but I think some people will be put off by the idea of do-it-yourself.
Yeah, they don't have to be, in my opinion. I think they can just go ahead and invest as diversified as possible, ideally into the global economy by picking an ETF on the MSCI World or the FTSE All World, which are indices that cover many different economies, and then statistically speaking, they're likely to succeed in the long term.
The four providers that we're talking about, so XTB, Trading 212, eToro, and IG, all have those options available. So they have ETFs, which are ideal for a DIY investor. What's important to note, though, that eToro only has around 1,000 financial products or instruments, whatever you want to call them, available.
Wow.
Whereas Trading 212 has as many as 12,000, IG as well, and XTB sitting at around 9,000. eToro is quite clearly the weaker one in terms of versatility or options that are available in terms of investing, Jan. There's also a couple of other red flags on eToro's side, which makes me question why we're even talking about them today, but I think it is important because they are such a popular provider and I have used them personally, and the app is fantastic, super seamless and intuitive. If you are looking for a really simple app to use, eToro is certainly one of them, but the fees?
Yeah.
Jan, their fees.
They're the only provider that charge a platform fee in our comparison, the only one that charges per trade, at least if you invest within reasonable amounts of money. And I also don't like the fact that they charge a 0.7% FX fee, which is among the most expensive in our comparison. It's on par with IG, and that's just not ideal. If you can avoid that, better do it. Also, they don't pay any interest on idle cash, which is, maybe not a deal breaker for some people, but it's not ideal either. I think one of the reasons why I like XTB so much is because they give you 4% on idle cash within your stocks and shares ISA. And you've mentioned in the past that that's a great idea to circumvent this recent allowance.
The cut to the yes, exactly. Sorry to interrupt. Yeah, the £20,000 threshold has been cut to 12,000 for cash ISAs for under 65. When this first was announced, people thought, well, I'll just deposit all of the money into a stocks and shares ISA, invest into, say, a money market fund that could generate, say, 4% on interest. That is an option. You just have to make sure that it's not 100% of your total investments, okay? So that's something to consider. And XTB could be attractive for that reason because they're offering a competitive, somewhat market-leading 4%. Trading 212 are slightly behind at 3.8%. IG are offering 3.75%, and eToro aren't offering any interest on idle cash. So that's a good point, Jan, and I think that's worth a note. Whereas XTB could be very compelling for that reason.
Yeah, another reason to pick XTB or Trading 212 are fractional shares. Fractional shares, if you don't know it already, it basically allows you to buy parts of a share. Quick example, let's say the share you want to buy is £100, but you only have £10 to invest. You'd be buying 10% of that share. XTB and Trading 212, they allow for that. That's great for people that invest smaller amounts, maybe regularly. IG and eToro, they don't. So that could disqualify them for some people. I think overall, Johnny, XTB is by far the best option in my opinion, although I must say it probably depends on preference. If you say, let's say you're investing into US stocks on a regular basis and this FX conversion fee is very important for you, then Trading 212 has a slight edge over XTB. They do charge 0.35% less. XTB, on the other hand, they provide better interest rates on idle cash. Plus, they also offer an excellent cash ISA of 4%, also worth mentioning here. And that's slightly better than Trading 212. Both of these providers, great options, and probably comes down to preference. What do you think?
I don't necessarily agree that it's by far, like the difference is huge between these two providers, but it does come down to XTB and Trading 212, and perhaps you're looking to purchase a lot of US stocks, which a lot of people are today, then Trading 212 looks very tempting. There are also other products inside the app that could be really interesting to people. Pies, for example, are fantastic. They're great ways to create buckets of shares or almost like create your own ETF.
So let's look at two providers that are not as good in terms of fees and probably not recommendable in our opinion. Let's start with St. James's Place, which offer an advice-led ISA. You get a human advisor, but that's gonna cost you quite a lot, in fact, up to 2% every single year in running fees. And then there's an entry/setup fee, which depends on how much you want to invest with them. 3% on your first 250K, 2% on the next 250K, and 1% above 500K. Not saying this is definitely worse than these other options, it's just a different product. And I think for most people looking to, invest as diversified as possible, as consistent as possible, it's probably unnecessary, but it's just my own opinion. Hargreaves Lansdown is also a legacy provider. They have a do-it-yourself platform, but the fees are also, they're definitely more expensive than the options that we've just talked about. 0.35% on funds below 250K, and also shares, maybe worth mentioning. And then there's £6.95 of fees on every share deal that you make. So let's say you make 10 of these every month, maybe a bad example, but then the math is easy. Then it's £69.50 every single month that you're paying that you would not be paying with one of these other providers. So that can quickly sum up depending on how many share deals you make. Really important to look at the costs. Maybe that's even more important than usability when you pick one of these providers.
£6.95 to do it, to trade.
It's a lot.
Trade one share. I don't think that's a sustainable fee model for Hargreaves Lansdown. I mean, that's significantly worse than the providers that we've talked about as positively. It's strange, isn't it? Just that was quite shocking to me. But ultimately, I think if you're someone who's looking not only for low cost but more options, it's just simple. It's XTB or Trading 212. That feels quite market wide. We may have missed a provider or two today. I'd be curious to hear from people in the comment section if you have a different recommendation, particularly from a fees perspective. But what's interesting about these products, Jan, or these providers or these services, you don't necessarily see like a discrepancy in the product that you're given. What I mean by that is you are just executing trades. Now, regardless of whether you're with HL, Hargreaves Lansdown, or St. James's Place, or Trading 212, or XTB, eToro IG, they're all going to execute on your behalf. So what I'm trying to figure out here is the higher the fee you pay, what do you get in return? What do Hargreaves Lansdown have to offer that Trading 212 doesn't?
Yeah, not much, especially within the same category. If you look at other categories, let's say you want ongoing advice. I do understand why that's more expensive. People need to earn salaries, Johnny. Question is just, do you really need it?
Yes.
You have to figure that out for yourself. But it's not necessarily fair to put them into one bucket, right?
They're charging £6.95 to deal a share. Trading 212 are executing trades for you as well, but they do it for free.
Yeah, that's right. Hargreaves Lansdown, they have a legacy fee model, and that's just what it is. And in the past, in fact, it was more expensive to trade stocks. That's a fact, right? If you've done, let's say you've started 10 years ago, you probably remember the times where £6.95 that was not unreasonable. In fact, when I signed up for my first brokerage account about 15 years ago or so, I think I was paying €10.99 in Germany somewhere, and I think that was relatively fair. There was a neo broker that has launched there. Wouldn't complain about it because it was just a standard. But nowadays, with all these cheaper options available, you might as well try to save as much as you can on these fees because it can make a huge difference in the long run. One thing worth mentioning as well, if you're interested in signing up for XTB or Trading 212 or one of these other two providers, we have affiliate links available. We even have one for Hargreaves Lansdown, but I don't think you're going to be signing up for that. We're going to put them into the description regardless. Feel free to make up your own mind. And if you sign up to one of these links, you'd support Johnny and I and help us continue to run this podcast on a weekly basis, which I personally enjoy a lot, and I hope you do as well. Yeah, let us know in the comments what's your opinion on stocks and shares ISAs. Which one have you picked in the past? Maybe if you're satisfied, feel free to point that out, and if you're not satisfied with one provider, also point it out. We always love these discussions and learn about which providers our community recommends.